Hey, good morning, everybody. It's Brian. It's Tuesday morning, the 22nd of September. As always, just a really quick run through of our numbers. Have a look at what we're going to be watching in Forex. Have a look over here at what we're going to be watching in futures. Haven't talked about crypto in a while. I'm not going to talk about it today. I'm working on my own bot in crypto, and so I've got all my crypto stuff is loaded with I've got a chart and I've got some code that I'm testing and I'm running on super fast time frames, 30-second and 1 minute time frames, faster than obviously we could ever make a decision as a human throughout an entire day. So pretty excited about that. I've still probably got another few weeks before I'm ready. Obviously I'd like it to be ready yesterday, but yeah, when I get this thing done, I'm gonna put it out for you guys and just have it be free, obviously with some hooks to it, being that you've got to use a certain broker and you need to subscribe to some services, not my services, but some services to make it run. But beyond that, I'm not going to charge anything for it. So yeah, I think it's got some legs to it. I just need some additional testing and more time with the code. I'm trying to work out some little tweaks. It's funny, that sort of a time frame, tiny little things make a difference between profitability and not being profitable or just barely breaking even. So anyway, all right, so let's jump into it. What are we watching for the day? First thing, always we have a look at what's going on in the news, and we know that today, from as far as just regular reports coming out, there's not a whole lot. Existing home sales, it's a yellow report. This could honestly be a little more impactful. Existing home sales is kind of seen as a leading indicator as to as to what's happening in the economy. Although I think I don't know about the rest of the nation. Here in Texas, the housing market is just booming. So this actually may be pretty good news. But then later in the day, 9:30 Central, 10:30 Eastern, Mr. Powell's testifying about the CARES Act. It looks like the testimony was released 18 hours prior to what it was scheduled for. But the real meat of these things comes when there's the Q&A. It's not so much the canned speech as much as it is the Q&A afterwards. And that's potential high impact, because of who's speaking, and then the topic being something that's on everyone's mind. Obviously, something out of left field with some sort of a resolution on that could certainly rally the market, but we'll see. All right. So big thing here is that there's just be aware around this 9:30 Central Time, 10:30 Eastern time frame for about an hour and a half. If the market's getting really crazy with chop style moves, all of a sudden suddenly just shoots up or shoots down, don't get too caught up in trying to chase that. I mean, that's the rule of thumb anytime. We don't want to chase the market ever. Just because you see a big push all of a sudden in one direction or the other, and you go, oh my gosh, there's something happening in insert name of instrument here, right? There's something happening. I need to be in on that. Maybe you don't. Maybe it's something that's news driven, and we know there's a lot of analogies. Yeah. Anyway, there's a lot of sayings around news style events. Buy the rumor, sell the fact, or vice versa. Depending on what it is. So, meaning that the market may pop in one direction or the other, and then as the kind of regular buying and selling starts taking place after that news has been digested, it may move back in the opposite direction of whatever that initial push was. So around news, when you've got a high impact like that, you might see all of a sudden the market just takes off, and you're like, oh my gosh, it's taking off, I need to be part of that. Maybe it's better just to step back, breathe for a second, and go, wait, do I really need to be part of this right now, or can I wait for regular conditions and then see what's really happening under a more calm situation when we've got regular players in the market and it's not an emotional driven move. So that's the whole purpose of looking at news and being aware of it so that we don't get caught up in something like that. All right. let's start over here with forex. Over here in the forex side of things, we've got some big moves going on. Kind of the biggest player, if you will, for the day has been the pound. Pound's been all over the place. It's been super low. It's been the weakest currency. It's been the strongest currency. So it's had a lot going on. A lot of whips around. Right now, I believe. Let me just go back over here. I thought that someone was speaking right now. Is Johnson speaking? I thought he was speaking. Anyway, all right. Anyway, so what we're watching here, pound's been moving around quite a bit. Similar to what we saw yesterday, though. If we look at pound cross pairs over here and look at their current movement, their current range for the day versus the average, many or most of our pound cross pairs have moved as much as they would typically move. So does it mean they can't move more than that? Of course not. They can certainly, move another 100 pips. It very easily could happen. But we're playing odds and probabilities. Everything that we do in trading, whether it's trading in forex or trading in crypto or trading in futures or stocks or anything else, all we're doing is we're using odds and probabilities in our decision-making process. Always. I don't care. You say, I don't use odds and probabilities. I just look at this, and these indicators, and I think it's going to move up. Well, you're using those indicators because they're whittling down to a decision that you're going to go up or you're going to go down. Odds say when all those indicators line up in a certain direction, the market's going to do X, X, right? You're using odds and probabilities, whether you think you are or not. There's always odds and probabilities. So, one thing we can look at here, very, very quickly in forex, because we're coming in kind of the tail end of a major market session, right? Markets open, Australasian session, limited volume. My brain just stopped working. The London session begins, and that's one of the biggest trading sessions. So a lot of volume begins coming in, and then the U.S. steps in on top of that, and now we've got the London markets, the European markets, and the U.S. and Canadian markets, and now it's just this huge, massive volume continuing on. But currency pairings still have a range that they trade in for the day. There's still a range for the day, and we're coming in kind of towards the end. We've got a few hours here as the U.S. market opens, the U.S. Trading session opens for forex. We've got a few hours of overlap between our market being open and the London market being open, where there's still some volatility, but still we get kind of there's still kind of a top end of how far something can move or will move. On average, it can move beyond that sometimes, but on average, it moves a certain distance. And if we're coming into this market here and we're looking and we're saying, hey, we've already moved 99% of what it typically moves, do you really see an opportunity there to pick up additional pips, or points, as this current market is open? What's the likelihood of that occurring? Probably not as likely as it would be if we'd only moved 70% of what a typical day would be. Now there's actually room in that move for it to still continue on. So that's what we're looking at. That's the whole reason we look at this. So anyway, that's a long way of saying, looking at the pound over here, we've moved quite a bit on most of these pairs. And let's say it pulls back, and now it gives us another opportunity, and now we're sitting 20 or 30 pips below where it typically is at the top of that range. Do we have opportunity, if we paint a 20 pip box on here, for it to move on and get us a quick 20 pips on a breakout? Take that into consideration. But it looks like right now our the euro pair, like the euro CAD, for example, even though they're flat right now, the CAD's strong, the euro's on the weaker side here. That's only moved 50 pips. Oh, yeah, I was talking about over here. The euro is below the midpoint, so it's a weaker currency. The CAD's flat, but it's above the midpoint, so it's a stronger currency. If we see some divergence there, where as this market gets going, the CAD suddenly starts pushing to strength and the euro starts pushing to weakness, that might be a little better opportunity than looking at some of the pound crosspairs, simply because, like the euro CAD, for example, it's only moved 50 pips on the day and its average is, 90 to 100. There's more opportunity there, I feel like, than in something that's moved 150 pips and its average is 140 to 145, right? So probably some more opportunity on one than the other. Does it mean this one can't move? No, I'm not saying that at all. I'm just simply saying that there may be more opportunity in something that hasn't fulfilled what its typical movement would be, rather than something that has already moved that range. So, so for today, things we'd be looking at here, Euro CAD is one to watch, but we still need divergence. We don't just simply blindly trade the Euro CAD. We still need to see that both of those currencies actually are having some movement. So we'd watch here to see that, hey, when this new session starts, do we actually see buying of the CAD and selling of the euro? Are we seeing these things actually being traded and moving where they begin diverging from one another? If that's the case, then yeah, we've got some opportunity, right? So that's what we're looking for there. So the euro CAD would be one to watch in my opinion. Maybe the CAD yen, it's moved 40 pips, its average is around 60. I see more opportunity in the euro CAD personally. US versus the CAD, that's moved 50 pips, its average is around 100. So high 90s, I guess. So US versus the CAD could be another that could be potential. So euro CAD, US CAD would be a couple to potentially watch here. But as the market gets going, we see the box is just painted on. That's the US session just began for forex. So we're going to watch what's happening over here as this begins and see if we get some level of divergence between some of these currency pairings that we're watching. All right. So that's what we're looking at there. Over on the future side of things, the S&P, beginning with the ES, the S&P index, we're in a short bias. Had a bit of a run up yesterday. It definitely rallied over the course of Friday afternoon, and then yesterday, from a where am I here? Yeah, yesterday afternoon rallied, kind of into the day here, but we're still short. Oh, why am I not looking at the right thing? Here we go. But we're still short. The 4 hour is short. The 30-minute is short. Until we cross up here, I think we really have to cross 3,300 on the ES. We cross 3,300, and we might start looking at longs again. But at that point, crossing up here, our 30-minute bias will probably cross as well, and we'll have a mixed bias between the 4 hour and the 30-minute. Remember, we're looking at simple, just moving averages here, just looking at moving averages to determine what our bias is. And we can see we've got a downward bias on the 4 hour, and we've got still a downward bias in the 30-minute. So we'd be looking for selling opportunities. That could look here, this 3280, 3290 has really played a pretty significant area in resistance now for us. So, this 3280, 3290 could certainly be a resistance point if we push up, looking to sell off of that. Breaks of really 3250 would be your break area. If we break below 3250, just selling short off of a breakout would be a spot to look at down there. Or of course, there's just the simple trading plan, which is the one that we recap here as we have trade opportunities, which is on a short bias like this, we'd want to see market begin making higher lows and higher highs. And as it pulls back with higher lows and higher highs, we can trail our entry point at the bottom of those previously closed candles in order to take advantage of a breakout back in the direction of that confirmed bias between the two periods. So a couple things to look at, just to recap that real quickly. Looking for bounce opportunities. Pullbacks to 3280, 3290 would be bounces to the short side. Breakout down here at 3250. If we break below 3250, that'd be the breakout to the short side. And then, of course, as I mentioned before, looking for higher highs and higher lows. So higher low, higher highs as the market pulls back, and then trading a breakout of that previously closed lower high back to the short side. Keeping in mind, if we do rally here, we break above 3,300, we rally back above 3,300 here, and our moving averages cross, then that's going to tell us, hey, we've got a mixed bias and we don't do anything, right? So that's pretty clear. On crude, we've got mixed bias still. Our 4-hour bias is long, 30-minute bias is short. But Brian, we can clearly see big red candles here. This is moving down, right? As I've said before, quantifiable, definitive, no guesswork. Keep it simple. You're long as the green is above the red, and you're short when they cross. If there's a mixed bias, this is gonna take care of any confusion for you. If my bias in the 30-minute is different from my bias in the 4-hour, that's just telling me don't trade. Just stay out of it. The market doesn't know really what it's doing yet. Let's just stay out of it. I keep using that phrase, know when to hold them. This is a great process, because I feel like it tells us, hey, conditions aren't right. We only want to trade when we know what direction that freight train is going to be going. We want to know what direction that elephant's going to be moving. And if the elephant's pacing back and forth, we don't want to get trampled as it tries to figure out where it's going to go. And that's the same when we get the markets moving up and down, up and down, up and down. We've got our 4-hour bias might be different from our 30-minute bias, because obviously the shorter term over here is going to change more rapidly than the 4-hour is. So as it's moving up and down and trying to figure that out, we just stay away from it. And then when when these two confirm, and we've actually got confirmed a movement in a certain direction, now we can hop on and go for a ride. And that's all we're trying to figure out here, is when can we hop on and go for a ride. And that's what looking at the market bias like this is going to show us. Do we catch every trend? No, absolutely not. Do we win every trade? No, absolutely not. Odds and probabilities, guys, odds and probabilities. Anyway, so mixed bias on mixed bias on crude. So we're going to stay away from crude. Over on gold, we've got a short bias again on gold. The 4-hour here is looking to the short side. I don't know why that's so small. So 4-hour bias is short. Big move down here on gold. We're sitting right around 1900. That's a toughie. I really feel like I'd want to buy off of 1900. But anyway, the bias is short here on gold, and we can see that on the 4-hour and on the 30-minute. So what that tells us is that we'd be looking for short trading opportunities. We'd watch for price to pull, to push up, making higher lows and higher highs, and then sell a breakout as price pushes down below that previously closed higher low. Or if you're just looking for specific levels, 1920 has been a big resistance point here. So we can look for 1920. We can see it marked here on the 4-hour. This is a resistance point going back, quite a ways. So 1920, big resistance point here is if we, hit this, we'd be looking to maybe bounce off back to the short side. So, look at 1920, breaks below 1900. And that's a tough one, because that's a big whole number, and I really feel like that'd be more of a spot to load up long and kind of a counter trend trade. But just trading in the direction of the trend, we'd be looking for short opportunities, and that's really what we should be focused on here, is not overcomplicating things and convoluting things with potential counter trend trades. So pull back to 1920, looking short, higher lows and higher highs, and then looking to short off the previously closed higher low. Breakouts below 1900 would be the breakout area to go short on that. All right, so that is it. And again, I'm not going to hit crypto. Crypto is just going to kind of be in the background for another few weeks until I get that bot sorted out. I'm really focused on getting that done. It's kind of a rabbit hole for me. I mentioned earlier this year, I've been looking at a lot of different things to automate trading processes. I've automated some processes already, which takes a lot of stress off and gives you back more time, because if it's automated, you don't really have to sit there watching it. You can just babysit it. You can use, and there's alerts, by the way. The indicator that's here, the BTX indicator, that's available for TradingView, you can set alerts with that, so that when you get the plot points that pop up, you can put alerts on your chart, and it'll ding, or you can even send a message to your email and let you know that the conditions have been triggered. Doesn't mean that it's a trade right away, but it's just telling you about the conditions. Hey, conditions have been met, so put alerts on there. That way you don't have to sit there staring at your charts all day. And if you're looking at a 30-minute chart, by the way, which is what we're looking at here, you really only have to check in at the top and the bottom of each hour. You don't have to sit there watching bars paint. Go have a life. Think of what you can do. You can walk a mile. You can walk a mile and a half, and then come back and check your charts and go out for another walk for a mile and a half. At a slow pace. So there's a lot you can do in those 30-minute windows between needing to check in, or if you've got a regular job, you can work your regular job and set a little quick alarm, at I don't know, 9:59 and 9:29 to say, hey, what's going on with the market? Ding, check. Do I need to take a trade? Oh, conditions aren't there. Now go back to what you're doing. It's super easy. People think that you've got to sit here all day staring at charts, and you don't. You don't have to sit here all day staring at charts. I guess if you were trading a 1-minute time period, you might. But if you're trading 30-minute time periods, just check in. Takes you literally, I'm not kidding, it takes a minute to check in. And if you have to take action and you're not super fast at it, maybe that takes you 2 minutes. So you can do this throughout the day really easily. So anyway, that's it. I'm gonna get out of here, and I hope you guys have a great trading day. If we have some setups that make sense to us, we'll talk about them in a recap later on today. If not, then we just come back tomorrow. I say this all the time, guys. You don't have to trade every day. You're looking for consistency, and you're looking for the best setups. And if they don't occur, if the best setups don't occur, you don't trade it. That's still trading. You've watched for the right conditions to occur. They just simply didn't occur. Back to the fishing analogy. Just because you went out to the lake and you casted and you sat there all day and didn't catch anything, it doesn't mean you didn't go fishing. It's the same here in trading. Just because you sat here and you didn't take a trade, it doesn't mean you didn't trade. Trading is about looking for conditions, odds and probabilities. Looking for the conditions that best give us the opportunity to have a profitable trade. Doesn't mean it's going to be profitable, but it gives us the best opportunity for that. And if we're just taking trades every single day without watching for that best opportunity, we're just throwing mud at a wall and hoping something sticks. We're not really getting anything out of it. We're certainly not going to have consistency that way. It's all about the process, and trading when the best conditions are met. All right, so that's it. Have a great day. We'll talk to you soon. Bye.